Welcome back to the Deep Dive. Today, we're pulling the thread on a company that's really everywhere, but maybe kind of invisible to most people. Unity Software, ticker U.
Yeah, Unity, it powers, gosh, a huge chunk of the games and digital stuff you interact with every day. So our mission here is to give you a quick but, thorough handle on their core business.
Which is kind of two-sided, right?
Exactly, that dual model. We'll look at their recent financials, which have seen a bit of, let's say, friction. Then there was that big security scare that really tested developer trust.
Oh, yeah, that was something.
And we'll unpack why Wall Street analysts are just all over the place on this stock right now. It's quite the spread.
It really is. I mean, this stock, it gives you whiplash sometimes. We've got some great source material that highlights this core tension. Unity needs growth, right? Especially from new ways to make money.
Yeah, the monetization piece.
But that growth totally depends on keeping developers happy and trusting them. And that trust seems, well, a little fragile sometimes.
It's the central balancing act. So to really get why even small news can make the stock jump or drop so much, you first need to grasp what Unity actually is, and crucially, how they're set up to make money.
But let's lay that foundation then. Section 1, the core business. What is Unity?
So fundamentally, Unity is defined as a real-time 3D development platform. Most people know it because of games, right? Mobile hits, indie darlings on PC.
Right, tons of games.
But it's broader now. Think interactive apps for architecture, cars, even film. They provide the digital sandbox, basically.
The tools to build these worlds.
Exactly. It's critical infrastructure for a lot of creators. But here's the key detail, the thing that causes so much debate. They're a two-pronged strategy for making money.
Okay.
They don't just sell you the development tools up front. They want a piece of the action after you build something successful with their tools. Recurring revenue is the goal.
Ah, the old, don't just sell the shovel, get a cut of the gold approach. I like
Right.
that. So let's break down those two pillars. Pillar 1 is create.
Yeah, this is the more traditional software part. Think the engine itself, the core development tools, licenses, term licenses, and the subscriptions developers pay to use all that software.
So paying for the tools to build stuff.
Pretty much. They monetize the act of creation and the quality of those tools.
Okay, makes sense. And pillar 2 is operate. This sounds like where maybe the bigger ambition lies.
Yeah.
And maybe more risk.
Operate is definitely where the explosive growth potential is seen, but yes, also the risk. This is all about monetizing the product after it's launched.
How so?
Well, think their huge in-game advertising network. That's a big one. Plus, cloud services, tools for running live games, live ops, and analytics to understand player behavior.
So build it with Unity, run it with Unity, make money from it with Unity. Full vertical integration.
That's the dream for them, yeah. Make the operate side completely indispensable. Their whole future growth story really hinges on nailing that.
Which brings us back to that trust point. If developers get spooked or annoyed.
Precisely. If anything damages that relationship with the developer, the whole growth engine for Operate starts to sputter. Developer loyalty isn't just nice to have, it's the bedrock for Operate success.
Okay, that makes the stakes pretty clear. So how did this create operate strategy actually play out in their recent numbers? You mentioned Q2 to 2025 financials. Headline revenue was around $441 million.
That's the number, yeah. About $441 million. But here's the kicker, and what the sources highlight. That was actually down slightly compared to the year before.
Down. Huh, okay.
Yeah, and they reported some really mixed trends within the business. We saw some growth on the create side. People are still buying the tools, the subscriptions.
Okay, so developers are still building.
Right, but there was definite pressure on some of the operate lines, the consumption stuff, the services, revenue tied to usage.
So operate, the growth engine, felt a pinch. That puts them in a tricky spot with profitability versus growth, doesn't it?
Absolutely. It's a classic squeeze. They need to invest heavily in R&D, think AI, cloud features, just to keep the engine competitive, especially against rivals.
Like Unreal Engine.
Exactly. But when overall revenue dips slightly, finding the cash for that heavy investment gets tougher. They're actively trying to balance profitability with pushing for that growth.
It's a tightrope. And for anyone watching the stock, that tension is probably going to be front and center pretty soon.
Yep.
The next earnings are estimated for.
Looks like early November 2025. November 6th is the date floating around as an estimate. That'll be a key moment.
Okay, mark the calendars. Now, as if that balancing act wasn't hard enough, they had that huge operational issue recently, the security scare. Let's talk about that, because the reputational hit must have been significant.
Oh, it was definitely not minor. Unity had to disclose and then patch a pretty serious security flaw. And it wasn't new. It had been there for years, affecting a lot of older versions of the Unity engine.
Years. Wow.
Yeah. And look, when your software is basically the foundation for someone's entire business, like it is for game studios, a security problem hits different. It's not like, your social media app having a glitch.
Right. I can only imagine being a small indie studio when that news broke. Total panic, probably. The sources said developers were strongly urged to update immediately.
Immediately, which means dropping everything, figuring out the patch, testing it. It caused huge short-term disruption, real costs for studios, and definitely dinged Unity's reputation among developers.
And there's that trust issue again, front and center.
Exactly. Now, the sources do note there's no public sign it was massively exploited yet, but the potential was there. And any incident that forces developers to stop creating and start scrambling to patch their core tools, it erodes trust.
And if they don't trust the core engine security,
They're probably going to be much more hesitant to rely on Unity for the operate stuff, right? The ads, the cloud services. It directly undermines that future growth plan we talked about.
it really connects everything. The operational stability directly impacts the growth story.
It absolutely does. One vulnerability can put the whole operate strategy at risk.
Okay, so summing up this section. Indispensable platform, ambitious two-part strategy. But recent results were a bit soft. There's margin pressure. And they just weathered a major security issue that hits right at that crucial developer trust.
That's a pretty good summary of the mixed bag.
Which leads perfectly into analyst sentiment, given all that. What is the general feeling on Wall Street about Unity right now?
Well, the overall tone is probably best described as mixed to cautious, but honestly, the clearest sign of the uncertainty is just looking at the price targets. They are wildly spread out.
How wide are we talking?
The average 12-month target sits somewhere in the low to mid $30 range.
Okay.
But the extremes tell the real story. You've got analysts with targets up around $50 on the high end.
$50. Okay, bullish.
Very. And then on the low end, you see targets dipping into the mid-teens.
Mid-teens. Wow, that is a massive difference. That signals fundamental disagreement about the company's direction, doesn't it?
Absolutely. It tells you the market just can't decide if Unity is successfully executing its future vision or if it's getting bogged down by its current challenges.
It perfectly maps onto those two pillars almost.
It really does. You've got two main camps. The optimists, the bulls, are looking ahead. The pessimists, or maybe just the cautious ones, are focused on the operational reality right now.
Okay, let's unpack the bull case first. Who are these $50 target folks, and what are they seeing that gets them so optimistic?
The bullish argument really centers on Unity's untapped potential. It's about successfully monetizing more of that huge developer ecosystem.
Through the operate side, mainly.
Mostly, yeah. They're betting on things like strong growth in developer subscription under new pricing models, success with new cloud services, and especially the integration of AI tools into the workflow.
Ah, AI. Of course.
Right. The thinking is if Unity can make that operate suite, the ads, the cloud, the AI stuff, really compelling and frictionless for developers, then the current stock price looks cheap relative to that future potential.
Okay, but wait a second. If the bulls are betting so hard on AI tools and cloud services, isn't that partly just betting on future hype? I mean, what solid proof do we have today that developers will actually pay significant extra money for Unity's AI tools? Especially when competitors, like Epic with Unreal Engine, are also pushing hard on AI features. That feels like a big execution risk baked into that $50 target.
It absolutely is an execution risk, and that's precisely why the other camp, the cautious camp, exists and has those much lower targets.
Okay, so what's the cautious argument focused on?
They're looking at the immediate tangible issues, the slower overall revenue growth we mentioned, the persistent pressure on margins.
The execution challenge is happening right now.
Exactly. And they point to specific risks, like one term our sources use, consumption revenue variability.
Consumption revenue variability. Okay, that sounds like Wall Street jargon designed to make things sound complicated. What does that actually mean for Unity's business?
Yeah, let's translate that. It's actually pretty important. Consumption revenue is the money Unity makes that's tied directly to usage.
Okay,
Like ad impressions served through their network, or the amount of cloud computing time developers use, or other services that scale up and down with activity.
got it. So it's not a fixed subscription fee.
Exactly, and that's the key. Unlike a predictable monthly subscription, this consumption revenue can swing wildly. If, say, player engagement drops across games built on Unity, or if advertisers suddenly pull back on spending
That operate revenue stream takes an instant hit.
instantly. And it's really hard for Unity to forecast accurately or manage smoothly. That variability makes their financial results look inherently less stable, less predictable than a pure software as a service business.
So volatility isn't just a market reaction risk. It's actually built into a core part of their revenue model, the operate segment they're betting on for growth.
That's a great way to put it. It's structural.
Hmm.
And when you have this kind of split opinion among analysts, any significant piece of news, good or bad, can cause a big swing.
Like positive news about an AI product launch could send it towards $50.
Or another security issue, or weak ad numbers could pull it down towards those mid-teens targets.
Hmm.
The stock is likely to react sharply to headlines.
Okay, that paints a clear picture of the tension. Let's wrap up by focusing on the specific drivers then. Section 4, key catalysts and risks. First, the potential upsides, what could actually push this stock towards that bullish $50 view.
Well, number one, as always, is the next earnings report. It's not just the numbers, but the guidance they give for the future, and especially any commentary on how well they're scaling and monetizing that operate segment, particularly ads.
They need to show operate is working and growing.
That's the proof point everyone wants to see. Beyond the pure financials, you need product proof points too.
Like what?
Like clear evidence that developers are adopting their subscription tiers, especially any newer, potentially more expensive ones, and critically successful rollouts of new products.
The AI stuff again.
Yeah, AI authoring tools are big on the hype list. Also, better cloud and remote building capabilities, and just generally showing their ad monetization tech is top-notch, maybe even industry-leading. Anything that captures more of the developer spending is an upside catalyst.
Makes sense. Capture more value from the ecosystem. Now let's flip it. What are the specific risks? The things that could validate that cautious view and send the stock down towards the mid-teens.
Risk number one is basically just execution failure. Failing to manage that growth versus profitability trade-off we talked about,
Right.
and specifically struggling with that unpredictable consumption revenue. If they can't get a handle on forecasting it, it makes managing the whole company much harder.
Okay, execution risk. What else?
Risk number two brings us right back to the core. Developer sentiment and adoption. We keep saying it, but the engine is critical infrastructure. Trust is paramount.
So things like security scares.
Security issues, or maybe controversial changes to pricing. Remember that big pricing fiasco they had a while back?
Oh yeah, that caused a huge backlash.
Exactly. Anything that damages trust makes developers less likely to build on Unity, and especially less likely to deeply integrate with those crucial operate services. That hurts the whole long-term story.
So developer trust is a major operational risk.
Absolutely. And finally, there's just broader market sentiment. Unity exists in a crowded space for software platforms, and valuations can be demanding. If the market sours on growth stocks, or if Unity simply doesn't show clear, consistent execution,
You could get repriced lower just because of the environment.
yeah, even if they don't do anything dramatically wrong, they could face headwinds just from sector rotation or changing investor appetite for risk.
Okay, so let's try to bring it all together. The quick bottom line here seems to be Unity is without doubt a leader in its space, real-time 3D game engines, that's clear. And they have this logical two-pronged strategy. Create, which seems stable, and operate, which is the big growth bet.
But the market is just fundamentally divided on whether they can pull off the operate growth effectively and profitably. The analyst targets are split. Opinions vary wildly, meaning news, good or bad, is likely to move this stock quite a bit, so you should probably expect continued volatility.
Right. And here's maybe the really interesting tension, the sort of provocative thought to leave everyone with. We've established that Unity's future success really hinges on making that operate side work, right? That's the key
Yeah,
catalyst.
monetization is key.
But we also identified that maintaining developer trust, avoiding security issues, pricing missteps is maybe their biggest risk. So how absolutely vital is maintaining that trust, managing the risk for the long-term success of the monetization strategy, the catalyst?
Symbiotic, isn't it?
It feels like a fundamental paradox. You desperately need your users happy and engaged to grow revenue through things like Operate, but the very act of pushing harder on monetization often risks alienating those exact users, that tension, that balance between profit and partnership. That seems like the core story to watch for Unity going forward.
That is the absolute tightrope they have to walk. It's going to be fascinating to see how they navigate it. Well, thanks for joining us for this deep dive.
Yeah, thanks everyone. We'll catch you on the next one.